Essentially, what we've been seeing as of late, and it is the end of the month, so wacky stuff happens, but we've seen a little bit of a rebalancing where a lot of investors are starting to fade the dollar, right? It's been a very, very strong dollar ever since the Trump election, and now some investors are starting to fade the US dollar in exchange for more of like a balanced portfolio, and there's a few reasons for this. One of the biggest reasons is that we are in monetary policy season. December is going to be a very busy month as 9 out of the 10 G10 currencies will be meeting, or G10 central banks, I should say, will be meeting. And I think like 5 of them are expected to make interest rate adjustments. I hope I have the dates right on this. I believe we start off with Bank of Canada on December 11th, the ECB, so European Central Bank, on December 12th, the Swiss National Bank on the 12th as well. The US Fed, I believe, is on the 18th or 19th. I may have that wrong. I don't remember which date. And Bank of Japan is certainly on the 19th. What we're expecting here is this. Specifically with the US dollar, there was this expectation of this continued rate cutting cycle. And this is something that we talked about a very, very long time ago, and it's been going on for a very long time. However, with last week's surprising, maybe not unsurprising news about the Trump tariffs, right? Have you seen that? If you guys haven't seen it already, I did a podcast about this. It's called, I think, episode 1057, Prepare for Volatility, where we spoke a little bit about it. But if you didn't see it on the chart, you see this big candle here? Yeah, that's when Trump said something about tariffs, specifically about Canada, and the market reacted in an extremely massive way. And with the threat of that potentially happening when Trump takes office, he did say that, hey, I'm going to sign it first day, January 20th. That would really interrupt the rate cutting cycle that we've been seeing in the dollar and may cause for a bit of a pause. So there's this short-term fading of the dollar where all these other central banks are doing stuff and the dollar may take a hit because of that. But then there's also this expectation of, hey, when 2025 happens, I can't believe it's 2025 already, but when 2025 happens, we may see kind of an opposite, or at least a pause in monetary policy, and the opposite effect, a much stronger dollar. And that kind of sets up for what we're looking at here on the euro dollar. Again, we had the lower low, lower close on the weekly, right?